Hello and welcome to Ninjacators.com Volume Spread Scalper. So what is it? Well, the Volume Spread Scalper is a volume spread analyzer. A VSA or volume spread analyzer involves analyzing each bar with respect to volume spread and the close and comparing them to each other. It was originally designed for short-term traders. However, we found that it works really well on longer-term charts, including 60-minute and daily charts. In fact, I'm going to show you a daily chart that is just really too good to be true. So it does work on all time frames. So what does the volume spread scalper do? Well, it identifies points where volume spreads are out of balance. And as you know, anytime anything is out of balance, it creates opportunity. So it signals bearish imbalances as well as bullish imbalances. And you can identify entry and stop losses that are based upon the signal bar. We'll talk about that in detail a little bit later. Key features are that it works in any market, any time frame, and we recommend under 10 minutes. This is a scalper based product. Okay, it works on any chart type, and it comes with a market analyzer scanner. This is a huge time saver and allows you to scan multiple instruments and be able to identify areas where the volume spread scanner is saying that there are volume imbalances. So you can take advantage of those across multiple instruments. It's NinjaScript and Bloodhound ready, and it is only available in the Volume Spread Scalpers bundle. So here's what it looks like. First, it gives you a long signal here, and it's saying anything. It gives you two areas here. When price crosses the green line, that's a signal to go long. So this is the signal bar here, and it's also telling you this is a green. This is a green or a long signal, and it is the spread here is only 8 ticks. So you can use the bottom side of this as a potential stop loss. And you'll notice that that's the long entry price, and you'll get a short. Here's a short entry. There's right here. It's saying that when it goes through, and it did, you get an entry here. This one you did not get an entry. This one you do get an entry. It goes through, so you would have been short. You got another short, so you could have added to the position. You got a third one. You could have also added to this position. And there was even a fourth one here. You could have added to your position there. So you had 1, 2, 3, 4 opportunities to get short on these separate separate signals. You did get a short one here, which actually was wrong, but we never got an entry because we never crossed the red line. So this was a no entry. So you'll see that sometimes you do get a no entry. This one was a no entry, and this one here was also a no entry. So that is basically how you would trade or interpret these signals. So we're going to kind of break it down into exactly what you're seeing here. And the first thing, it gives you a rectangular red box. It's saying this is a short. And it's going to give you a red square, which is signaling that there is a short signal. And that is the candle that is the signal candle or signal bar. And it's telling you that there's the stop that you would use if you went short. It's only a 2-tick stop. And here's the low of the signal, and that is the low of the signal bar is actually the entry point. And it's displaying the price. And this 2 above here tells you what the spread is. So you instantly know what the risk is for taking this trade. It's only 2 ticks. And you can see that that's the difference between the high and the low of this signal bar right here. So that is basically how you're going to trade this. You're going to take this trade with a 2-tick stop. And the entry price here is the low of the bar. Here's another example. This is on the crude oil 3-minute chart. And you can see here we've got a couple of entries. It's a red signal box. It's just saying it's going to be a short. It's telling us the number of ticks. There's 27 here and 26. That's a little bit rich on for me, but you could use that as a stop. And you can see that the difference is 26 ticks between the high and the low of the signal bar. Here you can very defined see the signal bar, and you can see the signal bar right here. So you would take this when it crossed the low here, you would have taken that short. That was good for looks about 20 ticks. On this one here, you had a short on the next bar, and again, that one was good for about 15 or 20 ticks as well. That's basically how you trade this indicator. Again, those are the signal bars, and that is where you get the entry price as well as your stop loss. And again, you would have taken an entry price right here and an entry price right there when it crosses. Now, one other thing you need to notice about this is a lot of people get worked up about taking this trade immediately upon crossing. Well, you almost always, I say almost always, get a second opportunity. You can see here you had another 3 minutes before it came back up here, and you got a secondary entry. Okay, so if you miss this first one, don't freak out. Same with this one. This one did come up, didn't quite come up to the very entry price, but it did come up. So it's not imperative that you get an entry immediately following the signal bar. You usually do have some time to get into those trades. Here's the chart I wanted to show you. This is a daily. This is where we've taken the spread scalper or the volume spread scalper here and put it on a daily chart. I want you to look here. You had a short. This was a short trade, and you can see that that definitely made money. Here you got a long trade. Yeah, there was a gap, but even if you bought above the gap, you still would have made money on that trade. Next one is also a long. I mean, this one is really where the gap was. You gapped above the entry line here, way up here. But even if you took that, it's a huge gap there. You took that gap, you still would have made money. You can see that there's several here. All three of those were winners. The fourth one here was also a winner when you came up here and took it along after it penetrated or went above that the green line there. Here's another green one. It came up, made money on that one. This one was a short, so it went from long here to short, and that one was definitely a winner. Never got stopped out of that one. Here you got another short. That one wasn't super good, but you still did pretty well. As a daily chart, you can see some of these are 15 or 20. Some of these bars, there's 15 or 20 points. So that's as much as 80 ticks right there. And here's another one where it gave you a short virtually from this point all the way to here. You had 11 entries and 11 winners. That happened over approximate 1 year. Now, obviously, we cannot. I had to show you this because this is just so amazing. But you must understand that this is the exception to the rule. You're going to have losers. All trading systems are going to generate some losers. However, in this particular instance, you had almost an entire year without a loser. Well, that last chart was so exciting that I almost forgot to show you the market analyzer window. This comes with a market analyzer scanner, so the volume spread scanner here, and you can see it's got a couple of currencies here, FX, and some futures as well, and it's basically telling you that these are the different signals that are currently available. So there is a bearish signal on the crude oil. There's a green signal or a long signal on the 6A, etc. This allows you to scan a whole host of instruments and still be able to figure out and find volume imbalances that you want to take advantage of. The volume spread scalper is ready to use out of the box, fully customizable with full documentation and support. So go ahead and click on the Add to Cart button and get started right away. We wish you a wonderful day and good trading.
To stay updated with what we are doing here at Ninjacators.com, be sure to like us on Facebook, watch us on YouTube, follow us on Twitter, LinkedIn, and Google+.